the broader point of our interest rate environment and inflation, what's your own reading? There is, of course, the guidance and commentary that we have got from the MPC, but your own view on how inflation as well as the interest rate scenario is likely to pan out over the next 4 quarters.
I think for our country, it's always like a trade-off between the inflation and seeing the growth. Okay. So I think in this trade-off, at least I would be seeing that after increasing the rate of interest by 250 basis point, okay, inflation also, and whatever we do now, the impact on the inflation has a lag effect. It takes almost 6 months actually to having that kind of impact. So I think if all other say parameters in terms of monsoon, in terms of crude oil prices, or in terms of international events, if there are no major surprises, I would be saying this rate of interest to remain stable in this range and then start coming down.
Mr. Kumar, could you also explain to our viewers the outlook as far as credit offtake is concerned in the current financial year? We've seen that interest rates have hardened. You also had to pass on the cost, and overall macroeconomic environment is very clear to everyone. What do you see happening as far as credit demand is concerned?
I think now rate of interest has almost peaked out. We have seen like last policy, Reserve Bank has not increased the repo rate. And the expectation is also like after remaining stable at this level, it actually would start coming down, maybe by the end of the year. Okay. But despite like interest rate of interest going up, we have not seen any slowdown in the credit demand. Even like if you see the RBI numbers, even during April, there has been a good credit growth from all the banks. So I think we are seeing, and this is exactly reflected in our numbers also. On the retail side, our growth is 38%. MSME growth is also 22%, and mid market has grown by 36%. But overall, like for us, it is around 13% because there has been a run down on our corporate book again as a strategy, okay, which has actually degrown by 25%.
Okay.
But going forward, we would be looking definitely overall loan growth between 15 to 20% because we are at 15 to 20, between 15 to 20, where retail would continue to grow 30% plus.
And would that mean that the rate of degrowth of the corporate book will continue at the same pace, or you think it will stabilize?
I think it has already peaked out. It has already peaked out. Going forward, it would be either flattish or it would be growing in a small number, but it would not come down.
How is deposit growth panning out, Mr. Kumar?
For deposit growth, it's a struggle for everybody, but I think we have seen very good efforts from our teams on this side. Though our deposit end of period growth is around 11%, but our average deposit growth, I'm talking of average numbers, monthly averages, has actually gone up by 16%. And similarly, our CASA deposit, average CASA deposit has grown by 26%, and average current account has grown by 30%, which actually brings the advantage on the cost of our deposit. Okay. So today, current account is 15% of our deposit, which is a non-interest bearing. So I think we would continue to make efforts in both these directions. But I think in the current scenario where there has been a huge fight on the deposit side, we have been able to grow very decently on both CASA growth and current account growth. And now the differential between fixed deposit rate of our bank as compared to best in the class has come down significantly.
Okay. On an aside on that point, we've seen a recent trend where tech companies are now getting into some sort of banking activity and also offering much higher rate of interest. That, of course, is overseas, Mr. Kumar. But let's say by the end of the year, what would you tell the average saver who still prefers fixed deposits in India versus other kinds of investment? That what can he expect at the end of the year on his fixed deposit?
I think last year it was a clear-cut preference for the bank fixed deposit. Okay, and I think this would continue for some time. I think in the current year also, the bank would continue to offer a reasonable good rate of interest on the fixed deposit. So at least I would be saying, as far as safety is concerned and the returns are concerned, I think the fixed deposit of the banks would be a very, very attractive proposition for the investors.
If you like the video, do like, comment, share and subscribe.